Welcome, everyone, to another edition of the American Wallet. I'm your host, Hunter Gaylor, and thank you for joining me today. Lots of really crazy things going on in the market. This is Monday, October 23rd. We've got a lot to cover. We are going to be joined by, after this segment of the program, John Lai. So stay tuned after this program for our interview with John Lai, who's the CEO of Pet Vivo. But without further ado, we're going to dive right into a lot of the market news that we have. We're going to go through some of the Twitter headlines. And then we're going to look at the economy. We're going to talk about what's going on with Bitcoin. We're going to talk about the recent announcement with Hess Oil Corporation and the announcement that they've made. We're also going to talk a little bit about what's been going on in the pharma business, specifically with shares of Pfizer and Moderna being down. We're also going to go listen to some words that Janet Yellen had with regards to what's going on in the market, whether or not America can actually afford another war like what we're dealing with over in Israel right now, and a lot of other very impressive and important news, because this is the conversation that we need to have. This is the American Wallet. We want to know where your money is going. So stay right here, and this is the American Wallet.
Coming to you live with the insight you need from the financials and political capitals of the world to the heart of innovation. This is Opportunities to Consider with your host, author, speaker, and corporate strategist, Hunter Gaylor.
Welcome, everyone, back to the American Wallet. As always, bringing you lots of opportunities to consider. We've got a lot of news on the table today, but I just want to go ahead and bring up, make sure we can get our shift programming. So if we can just pull that over the Twitter so that we see that, that's exactly the window that we want. I want to play this clip. This was from CNBC this morning, where he was sitting down talking with Commissioner Hester Pierce. Talks a little bit about what's going on with the cryptocurrency market. We want to hear from them, and then what we want to do is kind of talk a little bit about what we think this means.
Critic of some of our own agency's initiatives to join us to talk about crypto regulation, debates over ESG, and so much more. SEC Commissioner Hester Pierce, she is one of 2 Republicans among the 5 SEC commissioners. Good morning to you. Love to get your sense of where you think the state of some of these regulations around crypto really stand right now. There's been so much speculation, even in the past several weeks, about where a Bitcoin ETF might land. There was a moment, as you I'm sure recall, where a report came out erroneously, apparently, that one would be approved. That would be the BlackRock one. But a view that, given some of the things that have happened in court recently with the SEC losing, that maybe the SEC is now more open to approving one of these types of funds. Is it?
Well, good morning, Andrew. And I can't say whether or not the commission is ready to approve a Bitcoin exchange traded product. I've been thinking we should approve one for the last 5 years. So the logic for why we haven't has always mystified me. The court case obviously is an important factor in the landscape, but I can't guess as to my colleagues' approach to this topic.
But the reason I ask is there's a sort of a speculative fever taking place throughout Wall Street and other parts of the crypto world that believe that, given those court results, or those losses, if you will, or specifically that one loss, that it would change the thinking of the other commissioners at the SEC. You spend time with them, you talk to them. Do you see any shift in terms of that type of thinking, just even generally speaking?
I really can't speak to what we're going to do on the Bitcoin exchange traded products. I can say that generally the agency has not been very good when it comes to anything related to Bitcoin or other crypto assets. And look, I hope that every day I hope that they'll wake up and they'll think, you know what, we need to take a more productive approach. That hasn't happened yet, but I'm of course hoping that it will.
So I want to pause it right there for a moment and go talk a little bit about this. There's several companies out there, and I've been having this conversation with a lot of expert traders, people that understand the regulatory markets very, very well. There are platforms out there like Upstream, where they can trade shares and IPOs and NFTs, crowdfunded companies, U.S. and international securities, SPACs, and celebrity ventures, and it's all on the blockchain. These are the conversations, and these are the companies that should be coming out talking about how there's a platform that is internationally regulated to be able to regulate these types of products, because it all comes down to regulation. Now, when you have a wild west, obviously you're going to have the opportunities for the bad players or the bad actors to get involved. But for Bitcoin, I mean, if you look at what's going on in Bitcoin right now, and of course, I know I've been following the XRP market pretty closely as well. We are seeing some moves on that with regards to the recent settlements of some lawsuits with the SEC. But we're also following very closely what this actually means for where we're heading, right? Are we going to go down a digital dollar path? What is going to happen with regards to the CBDC? People are absolutely lashing back at these types of things, especially when you look at companies like BlackRock and Vanguard and State Street. I mean, these companies and their portfolios have such a magnitude of power and influence. If we do not watch what's going on with the regulation and keep an accountability and keep things in check, we're going to definitely experience some interesting waves in the marketplace. I want to move a little bit over to some big announcements that was going on that popped up today, and that's with regards to, I want to see if we pull the clip up here. But Chevron CEO Mike Wirth and Hess CEO John Hess discussed why the companies decided to combine in this record-breaking mega oil deal. It was a $53 billion deal where Chevron is going to pay $171 per share for Hess, and that's premium of about 10% to the 20-day trading average if you look at their charts. But I want to play this clip where they're talking about this, because this is always interesting. When you consider the state that America is in right now, we look at moving our ships into the Mediterranean. We're looking at our response to the Ukraine war. We looked at our response to the war that's going on with Israel right now and Hamas and the Gaza Strip and the West Bank. We're seeing where troops are mobilizing. These are not green tanks. These are not electric vehicles. These are petroleum-powered mega machines. And this is a very big market mover. When we see something happen like this with this particular timing, we have to follow it and we have to definitely take notes. So we're going to go ahead and play this clip. And then
we heard earlier that you guys have been talking for a couple years, and I'm really curious as to why now is the right time to make this happen.
Well, we have been talking for a while. There's a terrific alignment between the two companies, our portfolios, the cultures of the company and the people, and particularly as Hess's development in Guyana has continued to be de-risked and progress, what was at one point in time kind of a wider gap in valuation has narrowed, and the stocks of the two companies have traded into a range where it works for both of us. And so now's the time that those circumstances have come together. But for quite some time, we've seen the fit and the appeal and been working on this.
Which I'm just so curious, John, because on the call, it seemed like some analysts were intimating that, hey, did you get a high enough price?
Sure.
And also, you're doing things very well in Guyana, and I appreciate it's also the Bakken, et cetera, but we just focus on Guyana. You guys are already crushing it. Like, why'd you need Chevron?
Yeah, well, it's a great question. I think some context would be important.
Okay.
Our stock for the last 5 years was the #1 total shareholder return in the industry, whether it's independent or whether it's major oil company. Last year, our stock went up 94%, #2 on the S&P. So we've already created a lot of value. At the same time, now that the pricing got in a range that would work both for Chevron and work for Hess, we think we came up with a win-win. Hess brings Chevron growth in resource, growth in production, growth in cash flow. Chevron brings Hess financial strength in terms of the diversity of world-class assets, in terms of sterling balance sheet, and in terms of industry-leading cash returns. And when you put the two together, you create the premier oil and gas company positioned for the energy transition.
So very important, two very important facts. One is their portfolio alignment. Obviously, we see the work that they're doing. They did mention de-risking, which is good. If you look at the overall performance, he's right in that they were #1. When you look at the returns that they were able to have, #2 in the S&P 500, those are just some staggering points. But I want to talk a little bit about a very interesting parallel with some news that most people probably are not considering. Obviously, having a huge mega oil deal like that with Chevron, you can't help but go back and realize that during the Trump presidency, the Secretary of State at one point was Rex Tillerson, who oversaw ExxonMobil and was able to do some collaborative work with the Russian government. But there was some news out of Russia that they poured about $7 billion into Egypt in 2021 to create the Russian industrial zone. And I want to talk about why this is important, because they've been investing heavily in Egypt. And because of the crisis in the Ukrainian revolution, about 20% of all the world's trade moves through the Suez Canal. So this is extremely strategic for the Russian manufacturing trade. But what's really interesting is the 4.6 billion that they're investing into Egypt's Suez Canal zone. They're creating this thing called, quote, Sun City. And we need to keep our eyes on that, because we want to see how the U.S. is going to answer that. Egypt has become one of Africa's leading destinations for investment. It actually dethroned South Africa in 2017. The United Nations Conference on Trade and Development, that's the UNCTAD, stated, quote, Egypt, supported by a large increase in Chinese investment across light manufacturing industries and wide-ranging economic reforms such as financial liberalization, which is basically the establishment of a higher interest rate that equates the demand for and the supply of savings. So that's going to be very interesting. But what's very important about this is this Sun City is going to be about 2,000 hectares. The reports are coming in. But what it is it's a Sun City was expected to bring about 35,000 jobs to the Egyptian economy, but it's all based around nuclear energy. And obviously, what do you need to power nuclear energy? And so that's why we're going to be following very carefully what this merger means for Chevron and obviously Hess Oil Corporation. This plant for Russia's nuclear power in Africa will be one of the largest among the Arab world. So as we see the increase of BRICS, we see the backing of their currency by precious metals, and we see obviously everything that's going on in the U.S. with rampant inflation and rising interest rates. We did see a little bit of what was going on with the 10-year Treasury notes. But basically, they're anticipating the completion of this, Russia is, by 2026. Now, that's only about two years away, because we're in Q4 of 2023 right now, going into a presidential election year of 2024, where we've seen America fall away from its energy independence, where we've been relying on a lot of energy and oil and petroleum products from overseas. Now, obviously, if you look at having worked in some of those regions and can tell you, we have all of the requirements here. We have all the ability here. We have all the power. We have all the natural resources right here in the U.S. So obviously pushing an American first policy is a beneficial thing. But what does that mean for you, the American wallet? Well, what that means is it's going to be lower gas prices because of the supply chain that's required to actually ship the oil. It allows us for increasing jobs, which is increased wages. The petroleum industry impacts almost every major industry, from our manufacturing to our consumer goods. Petroleum is in a lot of plastics. There's very interesting documentaries you can go watch about all the different products that are a byproduct of petroleum. So having large mergers like this, it's important to look at their portfolio and see where they're going to be de-risking, where they're going to be continuing investments, and where they're going to be doubling down on some of their other investments. But we can't complain about a return, because their returns have been very, very, very good. Now, I just want to shift over real quick. There was another article that came out that I want to talk a little bit about here, and that was having to do with the pharmaceutical industry. Now, what's very interesting is we are seeing basically the gravy train being over for companies like Pfizer and Moderna. Pfizer shares are reporting down nearly 35% and 49%. So it's very, very interesting. This was a topic that was reported from Bloomberg, and it basically reported that the vaccine makers and the pharmacy chains and the makers of all the at-home rapid tests were basically losing money at this point. So they were, quote, the biggest losers from the nation's return to common sense is Pfizer. This was a major beneficiary of the pandemic surge. The company dramatically reduced its annual sales outlook by $9 billion on Monday, and this comes amid warning a waning demand for its COVID vaccine and their various therapies. Now, Moderna also warned this week that it's too early to accurately project where the vaccination rate will land for the upcoming year. The shares they've reported have been the lowest since November of 2020. And I just want to show you the correlation here. You're seeing a massive increase of a stock sale with Hess and Chevron, and then you're seeing, and by the way, a great performance in return, and then you're seeing Pfizer shares down 35%. You're seeing Moderna shares down at 49%, because the public's appetite for mRNA technology has taken really a backseat to really this new miracle drug that we've seen called Ozempic, which has become a key headliner across the Wall Street healthcare desk. So we're going to be following some of those. But there was an interesting note on Bloomberg, and I just want to point this out. This was Max Nielsen, who's one of the analysts at Bloomberg, Bloomberg Intelligence. He commented, quote, "The weakening demand for the vaccine and Paxlovid goes to show that this really is the transition to post-COVID, and people are going to have to figure out what that looks like well beyond Pfizer." Now, if you remember what was going on in the economy during 2020, you have to remember a couple of key points. The pharmaceutical stocks were basically, and the big tech companies like your Apples and your Samsungs and things like that were definitely artificially keeping the S&P and the overall markets afloat. So it was definitely artificially inflated. But we're seeing a correction, so we're going to obviously follow that extremely close. Now, I want to shift a little bit of our conversation over to a clip here from Janet Yellen, because we are talking about a war that's going on in Israel. We are seeing where we are as a country positioning ourselves. We see that Biden is yet again on a beach, and basically there's been a lot. We're not going to go too political on this, but I do want to let you hear directly from the horse's mouth Janet Yellen saying that the U.S. economy is doing extremely well. Now, I don't see it. I do not see the economy doing extremely well. I see certain sectors doing well, but not an overall U.S. economy by definition. Now, I want to play this clip, and then I want to get some thoughts.
What this all means. Paul Tudor-Jones, the famed investor, was on CNBC this week, and he said, "This is the most threatening and challenging geopolitical environment that I've ever seen. At the same time, the US is in its weakest fiscal position since World War II, with debt to GDP at 122%. Can America, can the West afford another war at this time?"
I think the answer is absolutely. America can certainly afford to stand with Israel and to support Israel's military needs. And we also can and must support Ukraine in its struggle against Russia. And look, the American economy is doing extremely well.
What this all means. Paul Tudor-Jones.
So there's a lot to unpack there. Quote, "America can certainly afford to stand with Israel and to support Israel's military needs, and we can and must support Ukraine in its struggle against Russia." There is a meme, and I can't find it for this program, but it's the Ukraine is now, we're not even thinking about the Ukraine anymore. In fact, we've seen a lot of backs turned on the Ukraine. Obviously, we can get very political with this, but it says we do need to come up with the funds both for Israel and Ukraine. This is a priority. So now the Ukraine is saying, oh, let me tag along on a new war that's going on now. There is one comment I believe is that I do agree with Janet Yellen on, and that is we should stand behind Israel. Now, do I think we should stand behind all factions of Israel? No, just like I don't think we should stand behind all factions of the American government. They don't necessarily represent the best interests of everyone. There are good players and bad players, and we need to come to that realization. But I do believe that we should be standing with Israel in every facet that we can. But I think we should do it from a military perspective, and we should do it from a position of strength, not from weakness. And we should do it from a support and a safety aspect. But we should also be smart about it. We shouldn't be stupid about it. So what we have to do is we have to look at how are we strategically sending resources and when do we actually get involved. If it's a matter of just simply sending checks and having no accountability, that's we have to be careful about addressing that. Now, war always is very interesting, and I covered this in my last American Wallet segment, where we talked about the moment they announced the war on a Friday, you come Monday, the markets are roaring on a Monday with massive investments in defense-related stocks. So you saw your Halliburtons, you saw your L3s, your Raytheons, you saw all of your Boeings. All of these organizations, stocks really started to rally because in a time of war, we see the defense industry. Now we go back to Dwight D. Eisenhower, where he said, be very wary of the military-industrial complex. So we are now seeing that play out, and it's trickling into the overall market that we're looking at right now. So that's very important. Now, given a war that's going on, we look at the use and shipment of petroleum. You have two very large multinational corporations, from Hess Corporation to Chevron, and that's kind of how I want to loop this back to discuss this. Because when you consider the fact that you're in a war and we have to support, that means we're sending our weaponry, we're sending our tanks, we're sending our fighters, we're sending our naval vessels. Those are being powered by a lot of the underlying oil market. So obviously we have to look at this. We're following the price of barrel of oil very, very closely because it really is a key driver. Now, one of the things that we have to look at is how is that affecting we, the American people? Well, we still have rampant high gas prices. We still have very high food prices. You're seeing, in fact, you'll see later in the segment when I talk with John, we look at a little bit about what's going on in the market, and you're looking at the overall increase from the millennials and the Gen Zers. It's the Reddit communities, it's the Robinhood trading communities, and you're seeing obviously higher spending costs, higher rent costs. Things are going up, and we're not seeing the amount of cash flow that we need coming back to decrease our rents and increase our overall supply chain optimization. So there's just a lot of news going on. I know we've only covered a little bit about it, but we have to ask ourselves from a geopolitical perspective, what is going on and how is it going to basically impact the bottom line of our wallets? So absolutely, she's saying that we can afford to fund the Israeli war with Gaza. Now, remember the way it goes back to the back of the taxpayers. We, the taxpayers, are the ones that are backing this. So if we don't have a vibrant economy and we don't create the necessary rules or infrastructure for us to be able to go out and create industry and create market and actually have a currency that is valued and stable, then you're going to have a big issue. And so that's why we have to be very, very careful of the billions, the hundreds of billions of dollars that are flowing outside of the U.S. and not staying here. So these are questions that we need to be asking and we need to be following. You know, the age-old saying is follow the money. Now, that kind of lifts a kind of a parallel. There was another headline that came up where the Biden administration now lifts sanctions on the Venezuela's dictator Maduro in exchange for oil. Now, this is another question. Why is it that we can lift sanctions on a dictatorial nation state for oil when we have one of the largest mergers that just happened with Hess Corporation and Chevron? We have the ability of plenty of natural resources. We've got the engineering talent and the workforce to be able to accomplish things like this. Why aren't we focused on American first energy? And that's something that, you know, we'll have some experts on the program talk about in some of our later segments. I know we'll have Stephen Moore on the program. We'll have Douglas Anderson on the program. We'll have some other people as well. But these are the questions that we have to be talking about. And this is one of the largest moves that the U.S. did. There was the biggest move where they they granted Chevron, which is a company we were just talking about, a license to return to Venezuela. And that was without asking for comments from Maduro's regime because of imports of Russia's heavy crude that had to be regulated or replaced urgently with Venezuelan heavy. Now, do you see how all of these things are starting to flow together? We're moving off of the petrol dollar. We're seeing how we're responding to the BRICS companies and what are the BRIC countries and how they're responding. We're looking at this deal with Venezuela is going to raise its crude oil production by 25%. Their oil production already currently stands at 800,000 barrels per day, according to various estimates, right? oil stocks are going to be in focus. We see it happening now. I said this on the last the American Wallet. You need to really follow what's going on. Occidental Petroleum, you look at Exxon, you look at Chevron, you look at Schlumberger, they're all lower about 1% in the pre-market when we saw these announcements happen. Now, when you look at this deal, it's not American first policy. So that's why when we're watching the market, we have to see where the money's flowing, and then you have to see, as a result of that money flowing to these various areas, what does that mean for where my tax-paying dollars are going to go? And we want to really dive into that. And I think that's important that we continuing to have these conversations and bring you the right analysis. Now, basically, this new license regime would allow financial transactions involving the PDVSA, which could boost Venezuela's oil exports significantly. And so, the ease sanctions would allow South America countries holding the world's largest crude and oil reserves to boost production by another 200,000 barrels per day. That's according to some analysts. Even though the time of achieving this increase remains uncertain. Obviously, we talked about how oil stocks are now going to be in focus, especially when you have this behemoth of a merger that just took place and announced today, as we played that clip earlier on in the program. But like I said, folks, there's a lot to cover. There's a lot going on in the market, and you need a place to turn. So we like to talk with the companies that we can. We know these big companies get a lot of attention, but within the American Wallet and the Market Hunters, we do like to talk to we do like to talk to the smaller and mid-cap market companies. So whether it's the Upstreams of the world, or the Vocals of the world, or the Pet Vivos of the world, or the Quantum Computings of the world, we like to stay on top and have those conversations with the executives and hear from them exactly where they see the market going and get that really good level of analysis. So we'll get that from John Lai, who is the president and CEO of Pet Vivo Holdings, doing some really incredible innovation in the pet healthcare space with the companion animal category. They're having increase over increase, absolutely stunning results that they have. So we'll sit down with John later in the program and get his take on what's going on in the market as well, because we know we like that information. So with that being said, today's Monday, October 23rd, and this is the American Wallet episode. To start out your week, make sure you have a great week. Make sure you make it a motivated Monday, and you just got to keep your head in all this confusion, because there's a lot of news out there, and we have to be able to wade through and see what's really important. So today's hot topic is definitely oil, but we're seeing as a result what happened in the pharmaceutical space with Pfizer and Moderna's share price being down. So we're going to follow that market as well. I didn't talk much about the tech stocks today. Stay posted. I think the newsletter for our quantum newsletter dropped today as well. So make sure you like and subscribe and follow that on LinkedIn. And we're all across social media. So without further ado, we appreciate you joining us right here on the American Wallet. I'm your host, Hunter Gaylor. It's always a pleasure having you here. And we look forward to next time right here. Don't go anywhere.
Lameness issues, joint pain, and osteoarthritis can be difficult to treat and debilitating for an animal's health and well-being. Take control of lameness issues and joint pain. Introducing Spring with OsteoCushion technology. With just one injection, Spring with OsteoCushion technology targets the root cause of lameness issues, joint pain, and osteoarthritis, helping animals do what they do best.
Quantum Computing Inc. is a full-stack quantum software and hardware company on a mission to accelerate the value of quantum computing for real-world business solutions. And with me is Hunter Gaylor, co-host and new to the street, and Bob Laskowski, the CEO of Quantum Computing. So great to have you back.
Thanks,
and let's just start with this major news. A Nobel Prize was awarded for photonic quantum entanglement. So explain that, and how does that vindicate the work that you're doing?
Well, it really, it's great. It's the whole notion of entanglement has been debated for a long time. It goes back to Einstein. Didn't believe that entanglement existed. He thought there were other variables, hidden variables, that ultimately were responsible for these, like what he said were spooky actions, right? That's the way he termed it. But that was done by the awardees, just validated the fact that you can entangle photons, and that's the essence of quantum computing. And it's a deep science, right? But at the end of the day, for us, it's very validating. It proves that a couple things. A, photonic computing is real. This notion of entanglement is a real thing. And the business applications of what that ultimately will empower for us to be able to take this into the marketplace is really, again, I just can use the word validating, because it's great to see that kind of announcement come out and recognize the hard work that these men have done.
Yeah.
Well, you recently had with one of your subsidiaries some news come out with regards to, this NASA contract. Can you talk about a little bit about how your company is working on that contract and what that means for the growth of your company?
Sure. That's really the first meaningful commercial or contract we've had on that work, or any of that work, any of the quantum work, really. And so it's two things. Number one, it again validates the need for these types of technologies, the things we can do with photonics, LiDAR in particular. That's what this contract is. It's helping us further refine the LiDAR capability that can be used from space to determine snow depth from space. That has environmental impact, obviously. There's some other uses for it. There's sort of dual use capabilities there. But it's very, again, I use the word validating several times here, but it really is. It's confirmation that the work we're doing is really good work, right? And it has commercial and, in this case, scientific applications to it. But to your point about the establishment of the wholly owned subsidiary, we needed that mechanism to be able to do business with the government. You can have commercial companies do business with the government, but in this environment, particularly with the sensitive technologies that we're using, the government has its requirements that it wants to see companies that are U.S. owned, have U.S. personnel in them that they can trust, obviously, for sensitive technologies to be able to do the contract work. So we established Key Solutions, QI Solutions, as that mechanism. It's headed up by a veteran, a very proven leader in this space coming out of the DoD environment that has done companies like this in the past, transferring technologies from commercial into military or scientific use. But the important thing is we have a mechanism now by which we can transfer our capabilities to government contracts. And we expect a lot more coming on the heels of that.
And what does that mean for the revenues of your company?
Well, it's great. I mean, the government, is typically, for early stage technologies like this, the government's the first one to take the risk in trying to apply it. And oftentimes, as you've seen with a lot of the investment that's been going on, it's coming out of the government. At first, it was for research. Past few years, it was just about research orientation. But what's coming out now is for application of technologies. And the government, we talk about government being risk adverse or what have you. The government will put money into technologies that they think are going to have a material impact, national security impact, scientific impact, and that helps lead the commercial market into the space. The commercial markets always look for some sort of validation, and the government gives it that validation by saying, hey, we're investing, so this is something you should be doing. So even to the AI arena that's often talked about. Government invested in AI decades ago. It just never materialized as a really useful technology until we had things like better computers and more information, right? But the early adopters were always on the government side. So this is a similar mindset.
It's interesting. And talk a little bit about the security launch now that your patent has been awarded, addressing unconditional network security. And what does that mean?
So first off, at the corporate level, we've talked about the things we're going to be doing, and we're doing them, right? So it's not just hyperbole, it's not just hype. It's about saying we've got these technologies, we've developed them, we're bringing them in the marketplace. So first was, well, not first, one of the early ones was LiDAR, right? Similarly with cybersecurity, we have the using photonics and the same core technology, we have the ability to do the things differently. So cybersecurity applications, near and dear to my heart, I spent a lot of my adult life working in these problems. Being able to look at post-quantum cryptography applications. So the concern is quantum computing is going to break RSA encryption. So all our secrets are going to be known. It's true, it will happen. Hasn't probably happened yet, but it's going to happen. So how do you protect against that? You need other quantum systems to be able to do that. So we step right into that void, where we are right in the middle of being able to provide authentication, secure networks, and encryption to secure against the quantum threat.
Yeah. Interesting where this is all going.
Well, it's incredible to see the company and where it's going from when we first started talking with Bob to now, and actually seeing, you know, the headlines and the news and the awarding of these contracts. I think it's a testament to what they're doing and what the future of quantum is.
Oh, without a doubt. I mean, we've got a great team. No, without, you know, I think we've got the best team in the industry, to be quite candid. I would say that. But honestly, I think we really do, because we're bringing the technology to the marketplace. And candidly, we are ahead of the competition, both computationally, and that's the benefit of the company, right? The company is not just a one-trick pony. We're not just doing computational stuff, right? It's just not about creating a quantum computer. We have all these adjacent quantum technologies and these solutions which we're bringing to the marketplace that really, it's unparalleled to anybody else that can do this. We're, I think, one of the few companies, if not the only company, doing this today. So we have a very broad base in the market. We're executing on the quantum computers that we talked about the last time, the Entropy quantum computer, our Dirac 1. We're going to be releasing our Dirac 2. Both optimization capabilities. One does cubo, or quadratic unconstrained binary optimization. The other one does integer-based optimization. Different problem sets. In fact, the integer one is a much more complex optimization capability. It's going to hit the market, and it's going to be used for supply chain, logistics, really, really complex problems. So it's amazing.
It's Hunter Gaylor, who also does hunting opportunities to consider, where you're looking for like different kind of companies, right? And you brought quantum computing to new to the street.
That's right.
Tell me how that all happened. How did that?
Well, what's really interesting is when you look at the industry right now, I had the pleasure of sitting down with Robert Lukowski, Bob, who's the CEO of Quantum, and I was just absolutely impressed with some of the innovations they're doing in quantum computing. The industry applications that their technology will enable in the future. I mean, it's a massive game changer. And I think when you spoke with him as well, you see the opportunities that his technology works for all industries: healthcare, medical, autonomous driving, I mean, you name it. But what also, Jane, really impressed me was the leadership and the background of the company. Very strong technology stack, very strong management and leadership. So, you know, it's going to be really fascinating to watch the growth of the company.
Yeah. So, and it's fascinating, just the quantum computing industry in general. I mean, I think everybody agrees that's where we're headed. You know, the question is, when do we get there, and how mature are we? I mean, what do you see this kind of having an impact on society, quantum computing?
Well, you know, when I sat down with Bob and I was talking with him and really kind of understanding where they see it going, because they're the ones in the business. Right. They're the ones creating, they're on the front lines. I think it's creating the democratization of being able to solve problems at a much more rapid pace. We really haven't had that before. But now that we have something that's more tangible, you and I will be able to, you know, have access to devices now that can solve problems. I mean, look at the technology in an iPhone today is more advanced than the space shuttle when we went to the moon. So you think about how technology is getting smaller and smaller and more affordable. And now with this chip that they have, I mean, it's really going to be remarkable to see where this goes. So I think we're going to see it very close. I mean, when I spoke with some of the leadership and learned about what they were doing more in depth, I think we're very close. I think we're very close, just based on my conversations.
Coming to you live with the insight you need from the financials and political capitals of the world to the heart of innovation. This is Opportunities to Consider with your host, author, speaker, and corporate strategist, Hunter Gaylor.